Hi, and welcome to the Stockscores Market Minutes for March 12th, 2012. This week's topic, what motivates action? A quick reminder before I get into the topic this week. You can subscribe to my weekly newsletter at stockscores.com/newsletters.asp. All right, let's get into the analysis and see what the market has in store for us. What motivates action? It's good to try and understand what will motivate buyers and sellers to act in the market. What are investors focused on? Now, what I like to do is survey the headlines in the financial news, or perhaps check what's being talked about on TV in the financial news to really get an assessment of what investors are focused upon. The reason I do that is I can then look to the right charts to tell me what they're thinking about, what they're focused on. And let me elaborate a little bit. Now, right now, people have been selling stocks to take profits. We've seen this over the last 2 or 3 weeks. The market's upward trend, which started at the start of the year, has kind of fizzled out, and it's been sort of trending sideways, and there's been a little bit of a pullback there, not because there's really any important fundamental reason for the stock market to not go up. It's simply because the buyers have lost their motivation. Now, they were buying because the economy was improving, because they saw the Greek problems in Europe get solved, and now they're just sort of tired and they need a rest. Now, we have to remember that when markets hit support or resistance, on the buy side when markets hit resistance, or on the sell side when markets hit support, there tends to be this loss of motivation by that side, and that's also a factor in the market right now. So we've got this situation where upward momentum has slowed, and buyers and sellers are now looking for a catalyst to make them act. The main factors that the market seems to be focused on right now are the U.S. economy and whether it's improving or not. And we've seen employment steadily get better, and so that's a good sign. Earnings are okay, and generally speaking, the economy is improving in the U.S., and that trend seems likely to continue. On the Europe side, okay, Greece is out of the way. Well, now what's going to happen with Spain or Portugal or some of the other countries that carry a lot of debt? And so that is a potentially negative factor. And then, of course, we have the state of the U.S. dollar, which depends a lot upon U.S. Federal Reserve policy. If the U.S. dollar goes up, well, that's going to hurt stocks and particularly commodities. If the U.S. dollar goes down because they're printing more money, then we should see that supportive for stocks. So here's the chart of the S&P 500, and as you can see, we've had a nice little run starting around the third week of December. It went up through January, went up through February, and we've now gotten stuck at resistance. There's really no sign that the market is going into a sell-off. We haven't seen a major breakdown yet, but we are seeing that loss of motivation by the buyers, and that's important to recognize. The Toronto Stock Exchange has underperformed the U.S. stock market, mostly because the U.S. market is improving, whereas the Canadian market has never got as bad as the U.S. market. And so we've got a Canadian stock market that's kind of trended sideways, but in an optimistic pattern. You can see that the green line in the chart shows that the bottoms are rising from left to right. But again, like the U.S. market, we're stuck under resistance. We need that catalyst to break us through. Now, the U.S. dollar had been in a downward trend through January and February, and it broke that short-term downward trend, which is the red line on the chart, at the beginning of March. And that has been something that sort of hurt stocks, but more than anything hurt the commodity space, and that's why that Canadian market has been underperforming lately. Now, the trend long-term for the U.S. dollar remains down, but in the short term, I think there's some potential here for the U.S. dollar to rise, and that would be damaging to the Canadian stock market in general. The VIX, of course, we call that the fear index. It remains in a downward trend. It's getting to the point where investors are showing some complacency, and that's a bit of a concern, because when investors are complacent, when they're not worried about anything, and that's what this chart is showing us, then if anything bad comes along, let's say there was a concern that Greece was actually going to default on some debt, well, that would cause a quick spike in the VIX, that would cause a big sell-off in the market. So I worry that the market is a little bit complacent here, and we need to be watchful of that. Now, gold broke its downward cycle earlier in February, and then had a pretty big pullback at the end of February when Ben Bernanke said that they probably weren't going to, or not that they said he wasn't going to do QE3, it's just that he didn't say he was. And that sort of hurt the market's psychology. And I think that gold is in kind of a sideways pattern here. It's hard to call, really. I would say that it's more likely just to go sideways than anything. Oil market broke out recently, is now in a little bit of a flag pattern, but likely to continue higher in the weeks to come. And that is a bit of a hurtful thing for the stock market because, of course, if oil prices go up, that almost acts like a tax on the consumer, as they have to spend more money putting gas in their car and less money shopping. And so that is a bit of a problem for the economy, and that might also motivate a little bit of selling pressure. So in general, I think that the market is really difficult to call right now. I think it's got a slight more likely sense that it will go lower in the short term, but I don't think it's going to be a big sell-off unless there's some surprise, and I talked about that complacency factor. But in general, I'm neutral on US stocks, neutral on Canadian, neutral on gold, and I'm bullish on oil. I think we could see a little bit more of a pullback here, but probably in general grinding our way sideways over the next few weeks. However, trend is up. We're just stuck at resistance. Once the buyers have sort of cleansed out their mood, and maybe some people have taken some profits, I think the market can move higher again. Well, that has been the Stockscores Market Minutes for, March 12th, 2012. Have a great week in the market and trade well.